Have you ever wondered why the rich keep getting richer, even with so much debt? Well, it might surprise you, but debt isn't just a burden. It's actually a secret tool that wealthy people use. But how do they do it? Did you know Elon Musk and Jeff Bezos strategically use debt to boost the growth and success of their businesses? Today, we'll uncover 7 key strategies that rich people use to make money through debt, from Donald Trump's real estate deals to Warren Buffett's expert corporate buyouts. Let's explore how these financial elites turn liability into opportunity. 1. Leveraging investment opportunities. Ever wondered how the rich turn small stacks of cash into towering fortunes? Let me explain. It's all about leveraging investment opportunities. Sounds risky? Sure, but let's get this clear first. Leveraging isn't just about taking risks. It's about strategically amplifying what you can do with what you have. Here's how it works. Imagine you've got $100,000 to invest. Instead of putting it all into something safe, you use it as a down payment to secure a $1 million property. Now, for the sake of example, think about what happens if that property's value jumps to $1.1 million. You've not just made a mere 10% return. No, you've doubled your initial investment to a whopping $200,000. That's turning every single dollar you initially invested into $10 in assets. It's exactly the playbook icons like Warren Buffett use when they spot a golden opportunity. But here's the kicker. If leveraging is such a game changer, why isn't everyone doing it? Well, you don't have to be a genius to know it's risky. The potential for high returns comes with the potential for high losses. However, for those who master it, the rewards can be life-changing. So what would you do if you had the chance to leverage like the rich people? Would you take the leap, knowing it could either catapult you to wealth or challenge your financial stability? This is the high-stakes world of investment, where big risks can lead to big rewards. 2. Arbitrage opportunities. Have you ever come across a deal so favorable it seemed almost like a steal? Well, what if I told you that's exactly how some of the richest folks build their fortunes? Welcome to the world of arbitrage, where the name of the game is spotting and capitalizing on price differences. Curious? Let's dive a little deeper. Picture this. You get a loan with a modest 3% interest rate and then use that money to buy a bond that yields 5%. It might sound like just a tiny win with a mere 2% gain, right? Think again. When you play this game with big numbers, that small percentage can mean big bucks. A genuine money-making magic trick. Now think even simpler. Imagine you find a smartphone for sale in one country at a bargain price and sell it in another where it's priced through the roof. Michael Bloomberg, among others, has polished this strategy to a shine, turning market quirks into a lucrative art form. It's all about being one step ahead, seizing opportunities that others walk right past. So why isn't everyone doing this? Well, it requires a keen eye, quick decision-making, and a dash of daring. It's not just buying low and selling high. It's about predicting trends, understanding market forces, and acting swiftly before the window of opportunity slams shut. Now think about your own life. Ever noticed a product cheaper online than in store? Or maybe something at a garage sale that's priced like yesterday's news, but could be tomorrow's hot ticket on eBay? That's arbitrage in its simplest form. How could you turn these everyday observations into your financial advantage? Arbitrage isn't just for the Wall Street wizards. It's a potentially profitable strategy for anyone willing to take the leap. So next time you spot a price anomaly, ask yourself, could this be my arbitrage moment? It's a wild ride, but for those who get it right, the payoff is as sweet as it gets. 3. Tax benefits. Ever puzzled over why billionaires like Elon Musk prefer borrowing to spending their own cash? It might seem odd to take on debt when you're swimming in money, right? Well, hold on to your hats, because there's a method to the madness: tax benefits. Let's break it down. When you borrow money, the interest you pay on that loan can often be deducted from your taxable income. Sounds a bit like a loophole? In a way, it is. By deducting these interest expenses, what you're actually doing is reducing the amount of money the government gets to tax. Instead of paying out more in taxes, you're keeping that money in your pocket, or better yet, putting it to work to grow your empire. But why would tax laws allow this? Think about it. This isn't just about giving the wealthy a break. It's about incentivizing people, yes, even the ultra-rich, to invest and spend. The idea is that this investment drives economic growth, creates jobs, and stirs up business activity. It's a bit of a give a little, get a lot approach from the government's perspective. So next time you hear about billionaires increasing their debt, ask yourself, could this be a strategic play to maximize their money's potential? This insight into how debt can be a tool, not just a burden, might just change how you view money and taxes. Why not see if there are ways you could leverage debt to your advantage too? Remember, it's not just about making money, it's about keeping it and making it work for you. 4. Real estate development. Ever thought about how skyscrapers and shopping malls spring up? It's not just big money, it's big debt, but in a good way. Let's dive into how real estate giants like Donald Trump and Stephen Ross have used debt to transform the skyline and their bank accounts. Here's the scoop. Real estate developers often use what's known as development leverage. Picture this. A developer like Donald Trump borrows massive sums to build high-rise towers. Sounds pretty standard, right? But here's the twist. They use mostly borrowed money. Once the construction wraps up, they start selling units or leasing out office spaces. The money from these transactions doesn't just go into their pockets. First, it pays off the bank. What's left is their profit, often much more than what they initially put in. Think of it like this. You put in a little of your own dough, the bank fronts the rest, and then you manage the project to completion. If all goes well, you repay the loan and keep the leftovers, which can be a substantial sum. This method turns a small amount of capital into a large project, greatly expanding potential returns. So if you were in their shoes with the capital at your fingertips, would you jump into the real estate game? Stephen Ross, the mind behind related companies, has built an empire this way, developing landmarks like the Hudson Yards in New York. This isn't just about building structures, it's about building fortunes. Think about it. Could this be the venture that transforms your financial future? 5. Buying distressed assets. Ever spotted a killer deal that seemed too good to pass up? What if you could apply that to bigger investments? That's exactly what savvy investors do with distressed assets. It's like finding hidden treasures where others only see trouble. Curious how it works? Let's dig in. Imagine this. You come across a car valued at $20,000, but because the owner is strapped for cash, you snag it for just $10,000. That's the essence of buying distressed assets. It's about capitalizing on the urgency and misfortune of others. Not to exploit, but to mutually benefit in the long run. Robert Kiyosaki, the financial guru behind Rich Dad, Poor Dad, champions this strategy. He sees it as finding golden opportunities where others see only obstacles. Here's the kicker. Investors often use debt to finance these purchases. Why? Because it allows them to acquire valuable assets at a fraction of their cost without tying up a lot of their own cash. They can then improve these assets or hold on to them until the market rebounds, selling them for a significant profit later. Now think about your own surroundings. Ever noticed a business struggling or a property in disrepair, but brimming with potential? How could you start exploring such opportunities to turn a small investment into a substantial return? Buying distressed assets isn't just for the cold-hearted. It's a strategic move for the keen-eyed investor ready to dive deep and resurrect potential. So next time you come across a deal that seems too good to be true, it might just be your gateway to a fortune. Why not see if there's a diamond in the rough waiting for you? 6. Currency trading. Ever wondered how some folks make a fortune just by trading money? It might sound bizarre, but welcome to the world of currency trading, where savvy investors turn fluctuations in currency values into substantial gains. Ready to see how it's done? Let's jump right in. Think of currency trading, or Forex, as the ultimate game of buy low and sell high, but with currencies. Here's how it typically works. You might borrow Japanese yen at a low interest rate, and then use it to buy US dollars if you believe the dollar will strengthen. If your prediction is spot on, and the dollar value rises against the yen, when you convert back, you end up with more yen than you started with. But why would anyone dive into such a volatile arena? Well, it's the thrill of the chase and the potential for hefty returns. Currency trading isn't just a matter of luck. It requires an understanding of global economics, politics, and market psychology. Traders like George Soros have famously made billions from bets on currency movements, his most notable being breaking the Bank of England on Black Wednesday in 1992. Now let's bring this closer to home. Ever noticed how the exchange rate changes when you go on vacation abroad? Each small change in the rate can mean a lot more or a lot less spending money in your pocket. Now imagine leveraging those tiny changes on a much larger scale. Diving into Forex might sound daunting, but for those who master it, the rewards can be as grand as any treasure. So think about it. Could currency trading be your ticket to financial freedom? It's not for everyone, but for the bold and the informed, it's a thrilling financial frontier. Why not explore if this could be your arena to shine? 7. Startup financing. Ever dreamt of launching a startup that could potentially join the ranks of tech giants? Well, did you know that many of these behemoths began their journey saddled with debt? It sounds risky, doesn't it? But let's unpack why this gamble could be worth taking. Imagine you have a groundbreaking idea for a tech startup. Maybe a software platform that could revolutionize the way we interact with technology. You need $500,000 to get your dream off the ground. Here's where debt comes into play. Instead of giving away a chunk of your company right out of the gate, you opt for a loan or venture debt. This way you keep more ownership while still getting the funds you need. Why would someone choose debt over just using investor money? Look at Mark Zuckerberg. He leveraged investor money, a form of debt, to scale Facebook incredibly fast without spending much of his personal funds. By retaining more equity, he managed to grow Facebook rapidly, and as we all know, it paid off massively once the company became profitable. So why is this important for someone like you? Using debt financing to fund a startup allows you to hold on to more of your company. You get the capital injection necessary to propel your business forward without diluting your ownership too much. Yes, it's a gamble. Taking on debt always is. But with the right idea and stellar execution, the potential rewards could be sky high. Now picture this. You're standing at a crossroads with your brilliant business idea in hand. Would you consider taking on debt to turn your vision into reality? What type of business would you start? Think about it. The next big tech revolution could be yours to lead. Why not take that first step and see where it might lead? And there you have it, 7 key ways the rich use debt to enhance their wealth. By mastering these strategies, you can harness debt not just to manage your finances, but to actively grow them. Remember, accumulating wealth isn't about overnight success. It's about making informed choices and allowing your investments to mature. Start with the resources you have, remain disciplined, and you'll see your financial landscape transform. If you found this video informative, please share it with friends and family. Don't forget to like, subscribe, and click the notification bell for more insights on achieving financial prosperity. Thanks for watching, and I wish you the best on your journey to financial success. See you in the next video.